Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and according to Business Insider, Vancouver bankruptcies are soaring. As the article says, Vancouver residents are filing for bankruptcies much faster than last year. Analysis of filings from the Office of Superintendent of Bankruptcies shows that there is an uptick of insolvencies in June, especially in the suburbs. Despite the rapid climb when compared to last year, the overall numbers are fairly low compared to the cities like Toronto. But bankruptcies are up 17.94%. Bankruptcies, which are borrowers seeking rapid financial relief, are up across the Great Vancouver region. The OSB received 184 bankruptcy filings in June 2017, a 17.94% increase from the same month last year. Total assets in these filings add up to $5.09 million versus $17.32 million in outstanding liabilities. John, can you go into what's happening?
Well, what's happening is people are indebted. Everybody, went on this debt binge throughout the time when Bank of Canada has been lowering their interest rate. So that was a huge problem. And what happens when everybody is going into and borrowing money in different businesses, over time, if you really overextend and there's several competitors in one business that everybody's borrowing, there will be a problem over time that suddenly some of them will go bankrupt because they're all fighting over the same dollars, the same principle to pay off the interest that they actually doesn't exist in the first place. So they have to go out and try to find venues to, go and find this new currency. But the problem is they might be in the same circle, so they're all fighting in the same circle, and then suddenly there's not enough of that money anymore to feed one or two of the competitors in that market, and then of course they lose.
Well, it mentioned that despite the rapid climb compared to last year, the numbers are fairly low compared to cities like Toronto. What does that mean?
Well, cities like Toronto has a very high substantial bankruptcy lever, like when it comes to versus Vancouver. Now, on a capita basis, the number for June versus Toronto was actually 41% lower, which just shows you how, of course, Toronto. But Toronto is also one of those big, cities where people are also overextending on that. Everybody there are overextending on that, and especially in the very expensive places like Vancouver and Toronto, you will see more and more of this popping up where people are scrambling to pay off their mass amounts of debt that they've accumulated because of the cheap currency available from the Bank of Canada. And of course, policies might have been in place to, push businesses to start something that they shouldn't have started because they got government grants or whatever it is. So a lot of, and of course, 95% of all businesses fail within their first 5 years. So it's quite normal that, you will have bankruptcies. Now, the cycles might be, depending on how many people gets into a scheme, for example, they're, running towards trying to compete in this one area of the market. Well, suddenly there's going to be only very few that are going to survive that race, and then you're going to have the very few, and those that are not surviving, either they get bought up or they just file for bankruptcy.
Well, it always seems like government and the central banking system's at the helm of everything wrong in society. I don't think that's anything new, something that we talk about all the time. But where do you think this will go next? What is a long-term problem when it comes to this development?
Well, long-term problem is that this is going to continue probably to increase as the lack of actually not the lack of because there's too much currency in circulation, and the interest rates are going up. So of course, people with variable mortgages, variable business loans, other different loans, their debt is going to be more and more costly to service. So I only see this gonna get more and more, like, build up slowly, more and more. Suddenly you might have just a complete crash. And of course, if we get a crash in Vancouver and Toronto big time, then you're probably going to see this, the bankruptcy rate going a lot faster and increasing very rapidly, because what's going to happen is as the debt collapses within, you know, real estate and all other things, it just trickles everywhere into the economy, and people suddenly had values that they don't have anymore that they used for collateral on different things. Think about these people, you know, going for bankruptcy, and then they have collateral, and then suddenly their house is worth like 50% of what it used to be. So bankruptcy is, of course, an elimination also of debt. You got to remember that. What happens is that suddenly that debt just becomes gone because they just can't pay for it. They're done. So it's an elimination of debt. So that's a deflationary pressure on the economy. Now, from that deflationary pressure that you get from bankruptcies and people, you know, losing their homes, what you will see is that, of course, the Canadian government desperately needs inflation to pay its debt. So that might be a pressure that, you know, is going to lead into a lot more money printing and quantitative easing programs, whatever they want to try to implement here in Canada.
Well, absolutely. And like we so often go into, the government and the banking system thrive off of debt. They love debt. They love a populace in debt because a populace in debt is a populace in servitude. As I so often say, if you shove people down a bottomless pit of debt, they are forced to ask for a ladder up from the government and the banking system, and that puts them in perfect servitude. That's exactly what they want. So, of course, they're going to be scrambling. But, John, I'm staying out of this report for the most part because I want you to kind of go into this because it's something that I don't have a full view on. But with that said, John, word of advice for people that are affected by this?
Well, word of advice is always remember, like, when you get into debt or anything in any business or any dealings that you get involved in, make sure you're not highly leveraged, as it's called, where you have a high debt to, you know, a potential ratio of what you are making. Especially in real estate, for example, you know, you want to have a low loan to value, like the actual physical value of what you are doing. And then, of course, a lot of people, since it's been so cheap, they've been taking a lot of risks, you know, investing a whole bunch of money into, you know, expanding what they're doing and so on. And there's a tremendous amount of risk and a potential reward there. But the thing is, you got to really understand, you know, especially one thing with debt and, you know, running a business, the number one thing that you got to understand is understanding what cash flow is.
Like Robert Kiyosaki goes
it's so important. Cash flow is what you have at the end of the day after all your liabilities are paid off, and you have the income, you know, it's income minus the liability cost. And after that, that's your real cash flow. That's actually what you sit with, not a whole bunch of like accounting tricks that shows you, oh, it's my profit. Well, it might not necessarily be the profit until you pay taxes and everything else. So the cash flow is what you sit when everything is said and done. All the expenses have been paid from your income. That's what you really have to look at and understand in any business or any investment that you get involved in. Because there's so many people that, you know, invest to get passive income, but the problem is suddenly their passive income and investment, for example, or a business or whatever it is, actually cost them way more than they recognize. They didn't go through all potential costs that things would cost them through, you know, running a business or investing in real estate. So that's where a lot of people fail, is that they don't understand what cash flow is and how important cash flow is king, as Robert Kiyosaki says it. And that is the final number. And if that number is, you know, close to zero or even negative a lot of times, that people don't understand that is negative, you've kind of lost. And that's why a lot of people end up in these bankruptcies.
Absolutely. This just seems really obvious. I mean, when it comes to cash flow, and on top of that,
it's so simple, but it's yet very hard for people to understand, because the accounting world and, you know, the finance world is really confusing people, and there's so much, you know, cost and everything. You just gotta do your due diligence, basically.
Well, that's what I kind of wanted to mention, John, was that so many people get into the markets not understanding how they work. They just kind of blindly walk into it, and then they reap the consequences. I mean, so many people, as we've gone into before, especially when it comes to like the housing market, when they want to get loans in that realm, or when they want to just fix houses up and sell them for more, more on a volatile, by volatile, I mean just constantly going up kind of housing market that's vastly manipulated and just based in just vast amounts of debt, etc., etc. People watch a home and garden television show and they see people fixing up houses and they're like, I'm just going to get in on that. And they think that their house is an asset and then they lose everything.
Well, and they start up franchises. They get involved in a business without any knowledge of what it takes or understanding of the costs, the full cost, and everything that's involved. Like, they just start it up without understanding the numbers. Numbers is so important. You gotta understand like all all the income versus all the expenses. And if you don't calculate all the expenses, which a lot of people don't, and I've seen this in several businesses around the world, in Norway, wherever I am, that people are miscalculated. They got into business because they were I want to start a business, I want to get involved here, but then they ran their business and didn't understand the importance of that cash flow through their business or investments, and then that's how they lose.
Absolutely. And of course we just got to mention that the advice is in his opinion, in our opinion, because of course there's stupid laws that stop you from talking about the very obvious. And with that said, I mean, there's a lot of people who just don't understand the markets. They don't understand the monetary system. They look at it like through, I guess, rose-colored glasses, and it's so basic, but it scares people away because it seems so complicated. But it's nowhere near as complicated as they make it. They purposely, the educational system, the media, they make it seem so incredibly difficult when it's really, the market principles are very basic. And I mean, it just comes down to have the demand, make sure that you don't spend more money than you make. It's as simple as just these very minute points that, as you mentioned, cash flow, what do you end up in the end? It just seems so simple, but so many people, they are afraid of it. They're lazy in a lot of cases, and they just go into it saying, well, I know what I'm doing because, I heard someone say something on TV once, or I saw someone say something on like Home and Garden television about something, as I mentioned, or I saw someone on Bloomberg saying, hey, this is how you start a business, and they don't mention any of the actual fundamentals to it, and then they get into it, and in a lot of cases they ruin their own lives. And I think that it's important that people understand this stuff. So thanks for going into this with us, John. One bottom line?
Well, the bottom line here is just understand that you don't borrow money and over-leverage yourself versus what your actual costs can be. And make sure that you do a lot of due diligence, because there's a lot of cost in today's market, and especially if you run a business, there's a lot of government fees and everything involved that a lot of people are not aware of and get slapped with, and then suddenly, they're done.
Absolutely. Well, thanks for watching, everyone. Until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
be the change.
Now to sound like an auctioneer. Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored by YouTube as they bring in the Anti-Defamation League to flag all of our content as hate speech. Also check our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. And don't forget to check me out at Josh Sigurdson at Steemit.com. That's Steemit.com, the future of social media, where you get paid via cryptocurrency, Steem that is, by the upvote and demand of your post. It's bound to take out the dinosaur social media, so I hope to see you there. But until next time, check out this word from our sponsor.
Are you looking to exchange a large amount of US dollars? Don't overpay with the bank on currency exchange. Think outside the bank. Banks charge unnecessary fees of up to 3%. Truth be told, currency exchange with the bank will cost you hundreds to thousands of dollars. Start saving now. Step 1. Register online. Visit our website and click Get Started. Step 2. Book a transaction. Phone us for a quote and to complete the transaction. We'll need to know which currencies you are converting and how much. Step 3. Transfer of funds. Once you confirm the transaction, we initiate an electronic funds transfer from the account that you choose. Your purchased funds are then transferred back to you in the account that you choose within 1 business day. It's that easy. Start saving hundreds of dollars on currency exchange with CBCE. Sign up online or give us a call today.